What's going on, guys? It's Justin from Pushing Profit. Hope everyone's having a beautiful day today. Now, I wanted to make a short, simple, and sweet video really just talking about one of the best practices that I encourage many new traders or traders who aren't as seasoned to the stock market to consider practicing. And that is really just trading the same tickers over and over again, right? And this is where, having a watch list comes in handy and it comes to play, right? It's really vital. Now, the reason I say this is because when you're in the stock market, there are just several different niches, right? You have people who trade penny stocks, you have people who trade blue chip stocks, you have people who trade three times leverage ETFs, three times leverage ETNs. There's just so many different niches, and the thing is, they all play differently. For example, you have penny stocks that they might run up, 50% in a day. They might do 100% in a day, right? Some of them I've even seen do 300% in a day versus, something like a blue chip stock like Disney. And we're just going to look at an example from today. From the lowest point all the way to the highest point of the day, it only moved 1.27%, right? Now, that's completely different from a penny stock that is moving, 50%, 100% in a day. They just move differently. Now, someone who is more seasoned to trading in the stock market, of course, they're probably more knowledgeable in these different niches, and they could try out different niches. One minute trading a penny stock, the next minute trading, Tesla, which is worth like $1,000 a share at the time of this recording, right? Now, again, like each niche is fine, whether you trade blue chip stocks, whether you trade penny stocks, whether you trade three times leverage ETFs and ETNs, they're all fine. However, I think it's better, especially for those individuals who are, new to the stock market, to really just try out one niche at a time, right? And see how that works for you, right? See how your success goes when you try out that niche. If you really want to, get into trading mid cap stocks, right, or even penny stocks, then build a watch list with tickers that meet that criteria for that watch list and trade them over and over again. And the reason I say this is because you begin to become more confident in what you're trading because you become more aware of the patterns, right? As a trader, you want to be able to identify patterns, right? And again, from penny stocks to blue chip stocks, completely different patterns. They're not going to move the same, right? They're just not. It's completely different. Now, if you're someone who is just like every day trading penny stocks, you get familiar with the patterns that look like successful setups and you're able to identify them more quickly versus, someone who's like really just listening to what everyone else is saying, someone on YouTube might say, oh, buy this stock, this is a great opportunity, you try this out. Then you read an article saying, oh, try out this stock, this and that. And then you have people on a forum and you may be talking about all the profits they made from penny stocks. So as a new trader, if you're just, running to all these different niches, you might not understand them as clearly because they just all move differently. Versus if you really just take the time to try one niche at a time, see which one works best for you, and then just kind of going full into that niche. And then of course you could become more versatile in a way where you could eventually become knowledgeable in multiple niches where 1 minute you might trade that blue chip stock and the next minute you might be trading like a mid cap stock, or you might be trading a three times ETF or ETN. Like I said, you just want to build that knowledge and experience in one niche. For example, when I first started trading, one of the niches I focused on was really mid cap stocks. So I was trading at the time was PLNT, which is Planet Fitness, and PYPL, which is PayPal, right? Now I have this watch list over here called blue chips and mid caps. I know they're two different things, but they're not that different, right? They kind of do move similar. I would say that mid caps do move a lot more though, just because of course a mid cap could be like a stock that's like $20, and a stock moving from $20 to $25 is a significant increase in percentage versus a blue chip stock like Tesla moving from like 1,000 to 1,001 or something like that, right? Now, for example, let's just take a look at PYPL, or actually let's just look at PLNT, right? And just kind of look at like the overall like 1 year chart. And of course you guys could see I had old support and resistance levels from like years ago, back when I really traded this heavily. But you could see like actually let me zoom in. Oops, guys, technical difficulties. Let me just zoom into around this area, right? This, around this time was when I was really just trading, and this is about late 2019. I would say a little earlier I was actually trading Planet Fitness. Probably like maybe early 2018 was when I was trading it more heavily. But that's irrelevant to this video. What I'm trying to say is, I began to become really aware and of seeing how this stock moves. Where most likely are these resistance levels gonna really come into effect. You could see I drew supports over here, resistance over here, and then it became support over here. And that didn't come from just like jumping all over the place. That really came from trading the same ticker over and over again until I, began to get a better understanding of how it moved, how much is it possible to move, so I could, better manage my risk. Because at the end of the day, it's really about mitigating your risk. It's not about how much you make, because, you could lose just as how much you make. It's really about how much can you keep, right? Mitigate your risk. How much can you keep? And, really being able to learn how much you can keep is really learning how the stock moves or how the ticker moves. So, what I encourage individuals who are really trying to dip their feet into trading in the market is to try one niche at a time, and really just study the patterns. Trade it often, even if you're paper trading, which is just trading with simulated money, right? Just try to keep trading it until you understand how it moves, and then once you feel that you are more successful in it, then definitely continue doing it. And if you feel like that niche isn't working out for you, then I encourage you to just try a different niche, and then repeat the same concept. Just keep trading it over and over again. I mean, when I first started, I immediately got into penny stocks, right? Because in 2016, that was really what everyone was talking about. I mean, people still talk about penny stocks to this day, but at that time, that was like, the hype, oh, trade penny stocks, that if you really want to be a successful trader. So I tried it, and for me, it didn't work out. Now, I'm not saying it's not going to work out for you guys, but me personally, I just couldn't get the hang of it, right? So that's when I moved into mid cap and blue chip stocks, and that's when I found my niche. And then eventually, I got into the triple leverage ETNs and ETF niche, right? So now I kind of move back and forth from trading triple leverage ETNs and ETFs to blue chip stocks. I mean, you can see I have multiple watch lists. I have this semiconductor triple leverage ETF watch list. I have a watch list for triple leverage ETFs in the financial industry. I have a watch list for triple leverage ETFs in natural gas. By the way, D guys and you guys are being delisted. But so I won't be able to trade those anymore. Oops, that popped up. But I won't be able to trade those anymore. But of course, I'm gonna move on to like other triple leverage ETFs, like the S&P 500 triple leverage ETFs like SPXS and SPXL, and then also my other watch list. So you could see that I kind of just moved from these different watch lists that I found myself having success in. Now, are you guys gonna have success in these watch lists? Who knows? Maybe you guys might excel in penny stocks where I failed in, all I'm saying is at the end of the day, just keep practicing trading the same tickers and then identify what really works for you. Again, like I said, I wanted to keep this video short, simple, and sweet. I don't want to keep going on. I could talk for days on why I really think this is one of the best things you could do when you first start trading. But, I'm going to leave that up to you guys to make the decision. Empower you guys to, try out what I'm saying. Again, this is one of my best practices. But with that being said, guys, make sure to hit that like button. It really does help with the YouTube algorithm. It helps, YouTube know, hey, this video, people enjoy it. Let's push it out for more people so more people could gain that knowledge. And then, of course, consider subscribing if you haven't done so already. And also join that free Facebook group. It's just a group I have. It's going to be in the description below. And it's really just a trading community that I'm building of individuals who are interested in, trading, so we could all kind of communicate, engage, and learn from each other. And with that being said, guys, again, my name is Justin from Push and Profit, and I'm out. Peace.